welcome members to our second virtual AGM. Unfortunately, with COVID, we're still having to do this way. So I'll just start off with handing over to Fiona McGlynn to give your presentation of the year's accounts.
Hello to everyone. COVID restrictions mean that once again I'm providing the AGM financial report electronically. As I usually point out at this time, the full accounts for the trust and the subsidiaries run to many pages, so I am presenting a financial extract as I would normally do at the in-person AGM. Hopefully you can follow the narrative and tie it up with the extract on the screen. Full accounts are available from the Trust Office. Again, these will be electronically available. I usually start with the subsidiaries, so taking them in turn, if we move to page 6 and 7 for Grail. The company continues to perform well with overall income at 162,000, remaining broadly similar to the prior year of 165,000. In terms of expenditure, repair costs were approximately 20,000 less this year, and that, together with no depreciation charge on the turbines this year, means that the profit for the year has improved on last year. Depreciation is a non-cash accounting adjustment to reflect the wear and tear of the turbines, and as these were fully depreciated last year, there is no charge in the current financial year. Grail is owed 76,000 by GGPL and charged interest of 1,871 during the year on the loan. This loan will be repaid once GGPL has better access to funds and it has dealt with its own external debt. Grail continues to pay rent of 8,000 per annum and a management charge of 10,000 per annum to the Trust each year. The level of donation payable to the Trust is determined by cash flow and the amount required to reduce Grail's corporation tax bill to nil. As the taxable profits are broadly similar to last year, the donation required to be paid is 77,000, and this will be paid over to the Trust by the 31st of December 2021. At the year end, Grail had a healthy bank balance of approximately 164,000, albeit this was boosted by taking out a £50,000 bounce back loan. Apart from GGPL, all the entities, all the subsidiaries and the Trust drew down a bounce back loan, as these were interest free for a year with no loan repayments in the first year and are fairly inexpensive lending. It made sense to take advantage as the funds can be repaid early if you so wish with no penalty, and it helped provide cash flow in the pandemic period. The Dancing Ladies do have a limited life. They're now fully depreciated, and a report supported by HIE has been commissioned to consider any repowering options or alternative renewable sources. So that really concludes the report for Grail. If we move on to GGPL at pages 8 and 9, you'll be aware that there were maintenance issues for the turbine which were exacerbated by the pandemic, and whilst some work has been done to the turbine, it's only operating currently at 50% capacity. So this, as you will see, the turnover figure has had a significant impact. Turnovers dropped from just under 300,000 to 122,000. The insurance policy providers no longer provide cover for loss of profits, but there is a potential claim against Enercon for loss of earnings being made. This has not yet been concluded or quantified at this point, so no figure has been included in the accounts with reference to any amount that might be forthcoming. GGPL paid rent 5,000 and a management charge of 10,000 in the year to the Trust. We continue to release the legal fee charge, which was paid back in 2008 for for transferring the lending from the co-op to Tridus, and that's released at a rate of 10,000 per annum, and this will continue for another 7 years. Due to the trading performance for the year, as you can see, the loss increased, and the capital allowance available to claim there is a small taxable loss of 10,000, and therefore no donation to the trust is required, as no corporation tax is due. In terms of cash at the bank, it's fairly healthy at 280,000, but this will be required to continue to service the debt. GGPL owes Tridus 560,000, and that requires a monthly repayment of around £7,300. It owes the trust 135,000 and GREL 76,000, but it will continue to concentrate paying the external debt and will pay only interest on the loans to the trust and GREL in the meantime. However, there continue to be restrictions and gearing and lending covenants to meet, which restrict what can be withdrawn from the bank. But these are not as onerous as with the previous lender, the co-op. It's hoped that the turbine will be returned to full capacity so that it can continue to donate to the trust in the future. So finally, if we turn to GTL on pages 10 and 11. And as expected, the self-catering accommodation was initially decimated by the pandemic until well into the summer. COVID grants of 39,000 or so, as you will see at the other income section of the accounts, help make up that difference. Moorings and berths were also affected by the number of visitors through early 2020. In terms of costs, the moorings costs include a final bill which had been in dispute of 14,000 for costs of installing the moorings. But this has been alleviated by a moorings grant from the trust of 20,000. Again included in other income. These were honesty box funds which had been collected in the early stages by the trust and now has been transferred over to GTL. In terms again of the other income, you'll see there's 61,000, which is simply the annual accounting adjustment with regard to release of the original capital grant when the moorings were constructed. This is a non-cash entry as those funds were received some time ago, but it's been released in line with the expected life of the asset. And likewise, if we move to page 11, there is non-cash entry again, the depreciation being the wear and tear of the assets over the years, which were built or purchased a number of years ago. So if we strip out the non-cash items being the 61k income and the 40,000 depreciation, there's actually a profit of 16,000, which is consistent with a similarly adjusted figure for last year of 17,000. GTL continues to contribute by way of management charge. 13,000. It was less this year as there were less costs during the pandemic, and it provided a donation to the trust of 29,000. It will donate 34,000 after the year end to reduce the corporation tax bill to nil. The bank position at the year end is relatively healthy at 150,000, albeit again this is inflated by a bounce back loan of 50,000, and funds have been received towards the campsite project, of which 57,000 has yet to be spent. The campsite project is due to be completed in 2022. GTL will no longer run the holiday letting cottages, as these have now been leased out by the trust directly to another operator. In terms of outstanding debt, there is the the bounce back loan, as mentioned, of 50,000, and the other debt that GTL has is the loan from the trust for the original moorings project, which is now reduced to 45,000. It's hoped this will continue to be paid off on a regular basis, but GTL does need to deal with carrying forward the campsite project first. All in all, it's turned out to be a reasonable year as a consequence of COVID funding and staycations. So if we move now to the trust itself, this takes us back to page 1. And again, as I've mentioned previously, the full accounts for the charity run to over 40 pages, and these are available by email. The main difference between this extract and the full accounts is that I have removed the non-cash accounting adjustment for depreciation of the assets, which was cost 107,000 in 2021 and 99,000 in 2020. So the main accounts will therefore show a surplus of 2,000 and 391,000 respectively for each of those years. What I'm trying to do is keep it simple and show the money in during the year and the money out and what that surplus has been spent on, and thus the overall increase in cash at the year end. At the bottom of page 1, you'll see note 3, where there's an analysis of the donations received in the 2 years to March 2021. I've mentioned these figures when we're talking about the subsidiary reports, and the total reduction reflects the issues that GGPL had during 2021. Broadly similar donations are expected from GTL and GREL for 21-22, but for GGPL, securing compensation and returning the turbine to full capacity will determine whether there will be any donations in the near future. So moving on to the next line from donations is rental income, which shows a small uplift on the previous year. Achamore Gardens continues as last year, but with increased grant funding. HIE support for development cash flow and projects continues. COVID support during 2021 has been received from Argyll and Bute Council of 28,000, the Job Retention Scheme of 23,000, and third sector resilience funding delivered by First Port of 55,000, a total of 106,000. Other funding has been forthcoming for various projects, including commencement of the new Pathways project. Management charges income has dropped back, given that GTL didn't provide the same level of management charges. There weren't the same level of costs due to the lockdown period. And in 2020, there was circa 280,000 funds from the sale of properties, which boosted the overall income in that particular year. With regard to expenditure, there was an increased spend in repairs and maintenance of 30,000 in 2021 over that spent in 2020. Achamore Gardens saw an increased spend on staff costs of 28,000 and project costs of 23,000, and this is simply spending some of the funds and grants received to date. Core costs relate to all the various development activities and associated staff costs. And there were increased COVID costs and distribution of the 20,000 that we spoke about to the GTL Moorings Fund, together with spend on the Pathways project. The reduction in lending means that the interest on expensive loans has now dropped by 50%. So in terms of the income and the expenditure, there are colourful pie charts on pages 4 and 5 showing the percentage spend income received. So in terms of the overall surplus for the year, how was this spent? 116,000 was spent repaying loans. The additional COVID support of 50,000 was, of course, the Trust taking out a 50,000 bounce back loan, which is again a short-term, relatively cheap funding taken out to feel safe during the pandemic in case support was not forthcoming. The balance of money in is simply the net receipts of monies received during the year which were outstanding at the end of last year for intercompany debt, grants, etc. So overall there was an increase in the bank balance, just under 105,000. Turning to page 2, you'll see that in the past few years the Trust has benefited from some one-off non-recurring transactions which will not continue indefinitely. These include the HIE grants and the sale of assets. And once these items are excluded and without donations from the subsidiaries, the Trust continues to have a shortfall. And although this is reduced from prior year levels of 100,000 or so, this shortfall is just due to the level of ongoing commitments. However, the shortfall is decreasing as interest and loan repayments reduce. And once again, this emphasises the importance of the contribution from the subsidiaries and the need to replace GREL's income in the next few years and continue to ensure that any projects undertaken are as fully funded as possible by outside sources, and this is something to which the board is fully committed. If we move on to page 3, this reflects the borrowing position at each of the last 3 year ends for the Trust. The first line relates to Nationwide, which is the cheapest borrowing. At the end of March 2021, it owed 470,000. Triados, which is the more long-term funding, so it's paid off more slowly, are owed 165,000. And AMC, the Agricultural Mortgage Corporation, has now been paid off fully. That was, as we say, the most expensive borrowing. And again, the bounce back loan, which was taken out during the year, will start to be repaid during 2022. So overall, the debt has reduced steadily, now sits at 636,000. The board do have plans to sell 1 or 2 other non-contributing assets to further reduce the debt, and the desired aim is to reduce that level to 500,000 within the next year or so. Overall, it's been a much better year than anticipated at the beginning of the pandemic, and whilst GGPL hasn't been able to donate as in 2020, GREL and GTL have continued to contribute, and various sources of COVID funding have stemmed the funding gaps. As Ian will no doubt mention in his report, there are a variety of well-funded projects with regard to pathways, the campsite, the gardens, that will be progressed in the current financial year. As usual, there's been a lot of hard work by the board and the staff to source the funding and progress the projects and improve GIA, and I hope you all continue to support them in carrying out their work.
Right. So an update in IGHT's activities. We've had to increase the rents from April, and that's increased our income by 5,700 plus, but we've also added 10,000 to the budget for the estate maintenance. So it just shows every penny we get in, we put on estate maintenance, and anything the Trust makes. As you can see from the accounts, that we only need £2,000 this year, but it just shows you that we're investing everything we can in the islands. We've added £18,000 for new and replacement fencing again for this year. There's a lot of money spent last year, and another 33,000 been added to improvement of Vacamore Gardens, and that's starting to really pay off as the gardens are looking well, as I'm sure you can see for yourselves. We still have 18 properties held in security with the Co-op and sorry, not the Co-op, the Trust, the Nationwide and the Trios Bank. That loan with the nationwide is now down to about 315,000 from over $1 million to start with. The Triodos is about 161. So we're continuing to pay them down. It would be good if there was no security held over any of our properties. And on that, the big lottery removed the security over the island in the spring of the year. It just shows you they're confident with us now. They were holding security for 80 years, but they decided to withdraw that. Highlands and Islands, Scottish Government still holds security over the island, though. And we have updated the policy for plot sales. We've got a few inquiries, nothing's actually come through yet, but we're keen to sell a few plots to generate some income to put into the projects that we are undergoing just now. The airstrip has, GTL update. The airstrip has been closed this year. We have the Flying Club contact us and they're keen to give us advice on getting it open again and working with them. They're planning to come and visit us this year, but haven't came yet. COVID restrictions is probably the reason they haven't came yet, but it's hoped that we could have a working airstrip for next year, and working with other airstrips would hopefully increase the amount of flights we get in. The moorings and pontoons have been reopened, been very busy for a few months. Unfortunately, with the recent COVID in Ireland, with the hotel and the boathouse having to shut, that kind of tailed off quicker than we were hoping for, but they've certainly been busy, and hopefully for next year they'll be very busy. The campsite project is underway, as you can see, and still on target for being completed for next spring. Grail, the Free Dancing Ladies have done very well this year, managed to actually increase the amount of money up to the trust. We've just carrying out an option appraisal to see where we can replace them, other renewable energy sources. So it depends on what will come back for that. There's many options, but it's to find the best one and the ones that we can actually do. So we'll look forward to that, because we need to really get something more to have the income coming into the trust, because the ROGs will not last any more than a few years. So that will be a big drop off to our income when that happens. So we need to have it replaced before then. Community fund, there's been a few applicants in. We had kind of earmarked up to 5,000 a year. That has not been reached, but there's 2 or 3 of them coming in, and you'll see from the newsletter how much it's been for different ones. GGPL, unfortunately, it's been out of commission entirely since early November last year. It's been running at 50% production since July. Still waiting on the full repair to be done. There is insurance claim in. If that's successful, we'll recoup a lot of the lost revenue. If it's not, it's had a major setback on us financially. But we do have enough reserves in place throughout the rest of the trust to sustain that just now. So the outcome of the election, we had Ken Deacon and Angela stepped down from the board a few weeks ago, and we thank them very much for their contribution over the last year. So it turned out there were 4 vacancies. Jane Clemens had went for re-election, and she was the only nomination this time. So Jane's back onto the board, which we very much welcome. So the makeup of the board just now is Brandon Clemens, Jane Clemens, Ian Pinninger and myself, Ian Wilson, and Fergus Christie has agreed to be copied on again, as he has done for many years now. There was no nominations for any of the other boards, so they are as what they were, which is all in the newsletter that you'll see. Ight Clemens has been our auditors, and because we can't have a members meeting, actually the trust is very happy with their work, so they're continuing to appoint them for the next year. And so thank you very much for watching. Fortunately, you weren't seeing me, just the presentation. So now we're hoping to have a meeting where you can actually join in live. if the internet's good enough. So the plan is to have another members meeting, or have a members meeting before the end of the year, where you can interact with and ask questions live at the time. Hopefully we can do that. But if you have any questions or comments on this, just contact the Trust office and we'll answer them as quickly and as best we can. So thank you for watching.